Welcome to the webinar. You have entered as an attendee in listen-only mode.
After the recordings are rendered and they're uploaded, you can just go to this page and you'll be able to watch the replays. Okay, and the way it's going to be is, in the morning I'll be talking about what I'm seeing in the order flow. I'm going to take you through a couple of setups each day, and by the end of the session, what I'm going to do actually to make it easier for everybody is I'm going to create a document with the setups showing you, the reason why the trade was taken, what I was seeing in the market at that time, just so you come away at least with also some actionable trade setups. And what I'm going to be focusing on today is the currencies. This morning, today, I'm not a big person that follows economic data, right? I'm not an economist. I don't pretend to be an economist, but I do like to know when things are coming out. And, nowadays, there's a lot of great resources online, and I just like to make sure the deck is clear, so to speak, if I'm going to be trading at a certain time, right? Because the last thing I want to be doing is be sort of caught off sides on a trade because a data release came out, okay? Now, that doesn't mean that I won't hold through a data release, but, depending on the importance of it, is something that, you got to take into account, right? Obviously, there's going to be some numbers that are more important than others, but, today it's Monday. Generally, you don't really have anything of importance coming out on Mondays. It tends to be a pretty quiet day, at least in the U.S. This is what the calendar looks like. I've been set to Chicago time. So there's not really anything coming out till about 10 o'clock. And then, we got some note auctions later after 10. But we got this consumer inflation's expectation, which, everybody knows we're in inflation right now. And it's not the headline number of CPI that's coming out. It's just an expectations number. So, at 10 a.m., I do have that coming out. So, but I'm not putting much into that number. So, people ask, which calendar do I look at? Well, I use this daily FX one, but there's a bunch out there. If you were to go to Google, you could just search daily economic numbers or something, and it will come up. But, what I like about this one on daily FX is, it sort of gives you a brief, summary of if it's expecting to have any sort of impact on the market or not. Sometimes you see these numbers that you really don't understand what they're about. I mean, we all know CPI, we all know non-farm payrolls, but sometimes, if people are talking about things like the jobs numbers, you might want to look at, the JOLTS when that gets released, which is generally before the non-farm payrolls, as well as the weekly jobless claims. Eric, we do have the rollover. I still got this one up here. Still got the December. They changed it recently on this, I think on this expiry, where it went from, the March contract becomes top step today. In the past, it would always be like basically the Thursday or the close of Thursday the week before, but today is the is officially the roll. Okay, Vadim. So is there a reason? Well, Vadim, I'm going to share you my template here real quick. So I'll just pull up the currency. Horatio asked me why you're looking at the currencies today, because it's, we're in that rollover period, unfortunately, with the equities. So it's not that, a great time to really be trading outright equities, the indices. Bonds, bonds, we had a lot of movement this morning already. But for what I'm going to be talking about today, I think it's going to be a little bit more useful to look at the currencies as opposed to the interest rates. Tomorrow I'll probably delve a bit more into interest rates, but today, I think for now I'll stick with the euro currency and and British pound as well. All right, so Vadim asks, can you share your workspace and possibly indicator templates? Now, okay, so what I have up here is a 5 range euro currency chart. Okay, people say, well, why not look at a minute-based chart? Well, you can, okay, and it really depends on your style. Recently I did a video on this. I posted up on YouTube, why looking at a range-based chart or a minute-based chart, is one better or the other? There's really no one way to answer that question. There's no right chart. There's no one wrong chart. People look at many different types of charts, and that's what makes the market. Now, what I have on here, Vadim, is, okay, so this is the regular order flows Trader 6 software. So for those of you that don't have the order flows Trader software, this may seem foreign to you, but basically what we're analyzing is what's going on in the footprint, right? What's going on in the order flow. And just really quick, I'm using the standard things of value areas of 70%, imbalance trigger of 4 to 1 or 400%, and minimum volume in an imbalance has got to be at least 10 contracts. So it means, if there's an imbalance of 1 against 5, it's not going to show. It's got to be at least 10 lots to show. So, 2 against 10 or 2 against 11 will show up as an imbalance. I have buying and selling tails off. I got delta divergence on. Exhaustion prints, I have set to 9. Imbalance reversals, I have turned on. Inverse volume imbalance, I have turned on. I've set to 1 instead of 2, and I have it until tested. And I'll explain that. Market sweep detector I have turned off. Weakness I got turned off. Sequencing I have turned on. Honestly, on a 5 range chart, I'm probably not going to see much sequencing with a cluster size of 5. But that was just sort of up there as a default. The ratios, obviously, I got turned on with my normal ratios, 30, 0.69. PLC slingshot on. I've got PLC's prominent PLC level 1, level 2 on. Level 3 I've turned off because I have a 5 range chart. If I was using a 8 range or 10 range, I would turn on level 3. But for now, I have it turned off because it's a 5 range chart. So I'm not going to be looking at sort of a third level prominent point of control because the bars are going to be shorter. Stacked imbalances I have set to 3. I have it turned on. Thin prints I have disabled because euro currency, generally it trades decent volume, but I'm on a 5 range chart, so it's a little quicker. And for now I just have it turned off. Value areas I got turned on, set to red and green. Engulfing value areas also turned on. And zero prints is turned on. That's why you're seeing these darker red colors printing there. Ladder contents, bid-ask footprint, not a delta or a volume footprint. And just 1 POC. I don't have 2 or 3 because I'm using the value areas. And lastly, or not lastly, but as far as the delta volume thresholds and delta thresholds is 25 and 95, and small min max is 3. So what that means is down here, the headline delta will either be magenta or cyan if it's within 95% of its max or min. The delta divided by volume threshold, which is the one just below the bottom, if it's over 25%, it'll be cyan, or negative 25% or more, it'll be magenta. And the small min-max is set to 3. So you can see these white min-max backgrounds is white. And lastly, the volume imbalances. Okay, multiple volume imbalances is enabled, right? Like you could see here, that will just put the box around the bar, like you see right here. So what I'm going to be looking for today in the currencies, okay, and I'm going to use both British pound and euro currency for now. Let me just expand these charts up a bit, make it a little bit bigger. So tomorrow we'll spend some more time. We'll spend more time on the interest rates. for today, though, I'm going to stick with euro currencies and British pounds. And defaults on the charts are the same, right? I've just copied these charts, opened them up. So what I'm going to be looking for today is a number of things. Let me get a word pad up here. Or no, just give me a second here. Microsoft. Word. So make this bigger so you can see it. Font like Arial. I'll make it 18 so you could possibly see it a little bit better. So there's going to be a few things I'm going to be looking for. The way I like to trade with currencies, there's a number of ways, but what I'll be discussing today is when a market is getting ready to turn, right? Now, this is not the turns indicator or anything like that. So basically what you're going to be looking for is a turning point in the market after it's been made. Okay, then you're going to watch I'll describe it, value areas, and you're going to be looking for the exhaustion prints. Okay, so it's really simple. What I'd be looking for, right? So here earlier today, I had a trade. Where was it? Hey, is it not showing up here? Here. Okay. This was this morning. I'm just going to go over this really quick so you get an idea of what I'll be talking about. Is I had this market, right? You can see the euro currency was, we sort of had this swing high. I could see we had a swing high up here. This is a value area that's being drawn out that wasn't hit. We sort of came down from, this 105.81 and came down to 69.5. Okay. Now it's, red candles, red candles, red candles. And I'm behind these prominent point of controls, right? I have this one at 74.5. I have this one at 76.5, right? Market came down and then it started to form a reversal in here. Okay. And I got these two green bars. I got these value areas overlapping, right? I've got a slingshot point of control. That's what this point of control is colored dark green. And we start trading up, okay? We left this value area basically untouched here, okay? Between 71.5 and, the low of 70, right? I dropped the stop limit in. I didn't do a stop. I used a stop limit at 73.5. My thinking was, okay, if we're going to leave this value area untouched, right? If we're not going to trade back into it, we could come back up here and test these highs. Up here, the high was 81. I had my target up here at 78.5, which was basically 10 ticks. And it started trading back and forth, back and forth. It did pull down to like 73, but then it just sort of shot back up. Now I do know I have to get past this prominent point of control, this prominent point of control. Normally, right, I like these bearish prominent point of controls. These are imbalance reversals coming in here and here. And, it's the point of control on the extreme, but we're already in a downtrend. Okay, if this was coming in, at a swing high, I could identify this as a swing high. This is my exhaustion print up here. We came down. I'm identifying this down here as balance, right? Why am I considering this balance and not this balance? Well, I've got the real overlapping value areas. You can see it's covering three prices here. It's just covering one price. We put in these two value areas, but market is going back and forth in here. So now that I see that we're starting to form a bit of balance in here. I've got a bullish slingshot point of control coming in here, meaning, we're dipping below, trading more volume below. Because I could see here at 70, I could see the volume, 40, 12, 25, 22. This is, decent volume. This is where it gets a little bit tricky, because people will say, well, here's your point of control. Isn't this the most volume? Well, it's 23, and what is that? 34. That's was that 57? Whereas here's only 52. Okay. Well, yeah. Even though this is the point of control, I still got some decent volume coming in here. But this 40 is your heaviest volume in the bar. Okay, and I like, when I see the heaviest volume coming in on the bid side, to me that's indicating some form of support, and we're forming that support in here. And then again, the next bar opens up, we trade back down, we're testing that level, and then you see the market starts to rally back up, hits my target, actually got all the way back up to that earlier high up here at 81, and then came back down and back down again. So that was a trade that I took earlier. All right, so where are we here? Let me just get these charts sorted out. And here we go. All right, so right now in the British pound, right, we have this high up here at 01, and we're just hanging around that high. Okay, we're not going anywhere, right? You got 1, 2, 3, 4, 5, 6, 7, 8 bars that are overlapping. This euro currency, okay, we had a potential turning point right down here, but I do like this exhaustion print. It's coming into this area, this greenish area, where I have a value area from earlier, right here. Okay, this one at 748 was kind of a nice one. This is sort of what I'm looking for, is that abandoned value area sticking out here. I'd like to have an exhaustion print in that bar, coming in on the next bar, and again, another abandoned value area, and you get the move. But nevertheless, we've come back down into this value area, but from before. And what am I seeing is, okay, I've got the bearish prominent point of control here. The value area is appearing on this candle. I've got a zero print forming. We've actually got a zero print inside the bar here at 71. We're staying below that. And again, the area that I'll be watching, if we can get past it, is this 69.5 right here, right below this area. Now I do have a bearish prominent point of control here. I've got one forming here, which probably disappear. As you can see, it just changed. But I'm watching this area. I'm going to see, if it can rally up from the support line, or if it's just going to break down below. If it breaks down below, the 69.5, I could see it dropping down towards the 60 level. Again, British pound isn't really given much here. We're gapping down, which is nice to see. Okay, so you can see, right, we're starting to break down now in the euro currency. So I got abandoned value, got 1, 2, 3, got one up here, one here, one here. Let me take a look. Okay, vetting. Yeah, I could put a link. The thing is, it's the default setting actually for the order flows trader should be your starting point, and you should figure out what you want to use. But I'll put my template. I'll include it in there. Let me make a note to add the template in. I'm using on these things. I can do that. Add templates. Okay, so we're starting to turn here in the euro currency. British pound, again, is still, I do like that we sort of have this gap down, obviously, in value. But I'll be watching it. But we're just sort of hanging around the 69.5, 70 area right now in the euro currency. Could be an area to potentially trade. But while we're waiting for something there. Now, even though I said I wasn't going to talk about bonds today, there's some interesting things happening here. This is the 30-year bond up here in the corner. Let me just make this chart a little bit bigger. We got our high up here. We got this bearish prominent point of control coming in. Your heaviest volume, right, is coming up here at 27. Okay, and it's coming in, as the market was going up, they traded 1169. And this is at 27. We're trading 24 right now. I want to see if this is going to hold. I think this market could probably break down a bit. I think if we could get below this 22, 21 area, I mean, we do have these imbalances that came in here. This market can potentially make a move down towards this, 13, potentially 08-ish area. But first we'd have to hold this level up here at 27 and start to break down below these two buying imbalances. Okay, so here what's happening in the euro currency. Okay, we're starting to catch a bid here. Okay, we have a smallish value area. All right, it's only 2 price levels, but it's come back in there, right? So it's not an abandoned value area. In this area of 69.5, we got both the buying imbalance here, the 52, and that selling imbalance. Which to me is nice, and to me that's a bullish sign, right? We've got this exhaustion print coming in, the 6. If this bar is going to hold and start trading up, I know we got to get past this area up in here, but again, if we can get past that, potentially we could trade back up to 81. But it's just more or less going sideways right now. Anyway, we'll come back to the bonds in a bit here. Okay, you can see how these candles turn, right? Before you had that exhaustion print here, now you got a bearish exhaustion print coming up in here. You've got this imbalance, 9 against 37, now you got 3 against 13. So if this market can start to break down a little bit, 68.5, again, we're more or less, 69.5 here. We got the 2 point of controls, the one below, the one above. It's forming a bit of a balance in there. Let's take a look. Do you ever use point and figure, and is there an advantage over range bar? Yeah, for a while I was trying to use point and figure, but I just went back to range bars. It's kind of similar. I mean, they're based on price movements, but I don't use the point and figure. Honestly, I didn't like the one that NinjaTrader has because, I'm heavily invested in NinjaTrader, so to speak. Some of the other softwares have, in my opinion, better point and figure reversal charts. Is the bearish point of control traders sitting on limit orders? Yes. It's so like what you're seeing up in here, right? The 107, that's some strong limit orders there. Okay. Okay, so we're starting to break. Okay, I see this bearish prominent point of control. We're starting to move down. This is a trade that I like to take. I've got the exhaustion print sort of gapping in here, but again, it's a little early, but I do know I have this bearish prominent point of control coming in at 70.5. We do need to obviously get below, 67.5, but, we'll see how it develops. Right now, it's still negative delta. There's some buying coming in here at 68. But if this 70.5 can hold,
Order submitted.
I think it's worth a shot because we're starting to put in another bearish prominent point of control here. All right, so I've got my exhaustion print. Let me move this chart up so you're not looking in the corner. Okay, so I've got exhaustion print here. I've got a second thought imbalance. The prominent point of control is out, right? Meaning it's, it hasn't been retested. Next bar is starting to trade, down, which is what you want to see. My initial target, my ATM I have right now is just an 8x8, but obviously I do like to adjust it. If we're going to get, back up to this exhaustion print or this prominent point of control, that's the area I'm going to hide around, right? Because if we're going to get past up here, then, I don't want to be in the trade. What would make this one look a lot better, obviously, is if we didn't trade back up into this value area. Renga, can you guide what to look for to start a trade? Yeah, don't worry, Renga. By the end of the next few days, you should have a good grasp of sort of what to look for. It's not like so much has changed in order flow over the years. I mean, I'm still looking at the same things. Exhaustion prints is something that I've always looked at for many years, over 10 years. These imbalances, so these areas where the market is selling down, starts to rally back up, but is met with some passive sellers in here. Okay, now I've added more things to it, such as the value areas, looking for these breaks in value as value is migrating lower and lower. These are trades that I like to look for. I want to take advantage of shifts down. So like I said, within a couple of days, Renga, you'll have a much more solid grasp of what to look for. Henrik, can you add a time column instead of a volume column when using volume chart in your order flow? I'm not sure what you mean by that. Add a time column. Henrik, if you can expand on that a little bit so I get a better understanding of your request there. Okay.
Target. No.
Oh, so just like that, right? It dropped. I just, again, small target. It's not a, I don't know. It's one of these things where, people say, everyone likes to post these big trades on, on Twitter, on Facebook. Oh, I made on a one lot, 500 ticks or something trading NASDAQ. That's well and good, but it's about being consistent, right? That's what you want to have. I mean, yeah, I could have had a much wider target. I still think this could probably dip down to around this, down into this area, but I do know I had some support coming in. You can see literally got to that level and bounced up, but it's about being consistent, right? Following a process in your trading, right? As opposed to, yeah, we all like to have, these home runs, so to speak, but honestly, it's better to be consistent rather than just going out there swinging for the fences every time. Now, to sort of break down this trade again, exhaustion print, the 7, the imbalance reversal right here. I see this is not a bearish prominent point of control. This is your prominent point of control. I get confused sometimes with those lines drawn out, but this is an imbalance reversal. These are actually two things. When we first released the Order Flows Trader software in 2015, that I look at, right, that I've always looked at, right? These were initially two of the ones that when we first released the software, I had them put it in there, right? Because I would always be looking at this exhaustion prints, volumes under a certain amount. Now, where it gets interesting is if you're trading something like 10-year notes that trade a lot of volume, you could actually change the level. What I suggest to people that trade 10 years is to set it at a higher level as opposed to 9 and below. I set it at 20. Excuse me. I set it at 25 on the 10 years. Now, British pounds, right? Something kind of similar happening here. We got our exhaustion print 3. We got our value area being drawn out. This bar here, right now we have the bearish prominent point of control. What are we trading? We're trading what, 88 right now, 87, 89 basically. So basically 88s. That's where your bearish prominent point of control is coming in. You have that gap in the value between the value area low of this bar, which is, basically 90. The high of this bar is 88. Looks like it's, for now at least, it looks like it's holding. And if we could start, trading down a little bit, I could see this thing breaking down as well. The way the euro currency is starting to break down. We are running into some support in here in the euro at 64. But exhaustion print, value area that's left exposed. We do have this bearish prominent point of control coming in this bar. But we'll see. We'll see if it can break or not. Euro currency right now is just going sideways. There's a couple of things I like in this euro currency, but it's disappeared. I like that you had that imbalance forming here, this 28. Then you had a couple of buying imbalances on the way back up. But I think this market can break here. We'll see. If this British pound can break below, 84, I think we could drop further. But again, we're starting to see this area of balance that was forming here, and now we're starting to break out. I can see the value area moving down. Value areas, even though there was this little gap in value here, we just sort of went sideways. But I like this, what I'm seeing up in here with the exhaustion print. Previous bar, you had the bearish prominent point of control. This current bar, we got that bearish prominent point of control.
What are those?
Okay, so British pound. Eric asks, possible to add some sound alarms? I'm not a big user of sound alerts, and the reason being is, if you're focused on one market, it's probably fine. But I watch different markets, and honestly, when everything starts moving, then you're going to get a lot of alerts going off at the same time. And I don't follow as many markets at once now as I used to, but I always have that in the back of my mind, because you're always sitting there thinking, oh, what's this? When markets are moving and you're starting to get these sound alerts, it doesn't say cause panic, but you start thinking, oh, what's this? I got to do this. And I've used these sound alerts, and I've used pop-up alerts, all sorts of things, and it's just like sometimes you just close it because it's in your way, and it just becomes a little bit more of a hassle than being helpful. Okay, so British pound is starting to break down. We'll keep that trade on here for now. Let me see here. What made you pull the trigger on the last short, the buy imbalance? At 37, that got no follow through. Yeah, that was part of the reason. Just above it, this buying imbalance, right? What we call these imbalance reversals. Okay, so what's coming in up here is, you got market was selling off and it started, potentially to bounce. People buy the dip, right? I mean, that was the war cry for a lot of crypto traders. I don't know how they're doing now, but when I start seeing these, see a little bit of a bounce and the aggressive trading coming in, it's almost like people, that's what they're doing. They're buying the dip, but it's met with supply. Now, you could make the argument, well, it's only 37 contracts. That's not a lot. Well, again, it's an imbalance taking place in the market. Now, I do have it set to imbalance levels of, 10 or more. So it's not going to show up as, 1 against 9 like down here. Obviously, the 1 against 11 is showing. So I do have a minimum threshold that I do like to see. And I do like that you had that exhaustion print at 7 right behind it. On the software, if you were to go in here, exhaustion print, right? This is where I have it set to 9. Okay, if I have it set to, you can set it to whatever number you like. You could even set it to 3. If, I know some people that were trading MNQ, and they're using 5 as their exhaustion print level. The imbalance reversal is the next one right here. So it's set to 10 here. So the exhaustion print, the imbalance reversal were sort of my 2 keys in there, so to speak, on the reason why I took that short. Now, I would have loved it much, much more had this value area been exposed, drawn out the way it is up here. Again, this market was sort of showing some bearish tendencies, right? You've got this bearish pound point of control coming up in here. And it's just sort of coming down and looking for that bounce back up into this area, but then it was met with that supply right here. Okay.
Target fell.
Oh. So again, kind of a similar trade in this British pound. Okay. Let me just pull it here so it's a little closer to my microphone. Expand it up. So, you're swinging high here, then you're just balancing, right? You got 1, 2, 3, 4, 5, 6, 7, 8 bars. Now, how do I determine if a market is balancing? Well, I'm looking at the value areas, right? If the value areas are overlapping, right, which they are here, it's going, you can see the value area, this, they overlap, even though this is one, technically that's an overlap. Then we have a break, a gap in the value right in here. All right, that was, to me, a bearish sign. And then it overlapped again. Okay. Now, we ended out this, when I have this area that's balancing, I like it when you sort of come out of the balance, either to the downside or to the upside, and you have this gap, right? It's hard for people to understand. When I'm talking about value gaps, right, I'm looking at the value area where the volume is concentrated. And there's this gap between these 2 bars, right? Then it overlaps. The important thing is when we come out of this balance, have this value area, be open, be exposed, right? Where it doesn't retrace back into. Then I see it come back up towards it. I've got the exhaustion print, the 3 contracts here. And then it starts trading lower. I know that I have this bearish point of control, and this was similar to, sort of this, it's not an imbalance reversal here. It's 104 against 149, but it's, it's my bearish point of control. Here you had the 37, that imbalance reversal. But I know that's the heavy volume, right? I got in at the bottom of the bar because I know that if we break this level, chances are we're going to continue down. And I do know that I have this, if we can hit this area, we're going to form a new bar at 84, and it's going to leave this value area, untouched, right? So abandoned is the term that I like to use. And then obviously here you got the zero print, another bearish point of control. If I was paying a little bit more attention to it, honestly, that's people say, why don't I do more sessions like this? Is sometimes I'm talking about one market, like I was talking about something, and then something else is happening at the same time. So it gets a little bit trickier. But nevertheless, I do think there's probably going to be more to this move down here. Now it's going to be interesting to see what happens in the euro currency, okay? Because I got single print, exhaustion print, exhaustion print. Whoops, there. I say that, but the market's already made its move because I didn't have it all the way at the end. Yeah, so bearish point of control, bearish point of control. These two exhaustion prints to me is a sign that this market can keep dropping, right? Because every time it tries to rally, I mean, look at this bar. We opened up at 64, rallied up, only managed to trade 2, and then it dropped, it starts trading lower. People sometimes look at the volumes that go through in the euro currency and say, oh, this is a lot of volume, right? The 357, the 238, even here was 551. The thing with currencies that you also got to take into account, and it does sort of skew things like delta up a bit, is there's a lot of futures against the cash against the futures. And sometimes you see these big volumes come up is because someone found a discrepancy between the cash and the futures, so they're able to do it. And there are market makers in the currencies, right? The CME has a market making group to provide markets in the currencies, provide liquidity. But this is also a nice thing when you see, sort of 2 bars coming in with exhaustion print, just as you see here. Actually, this is zero print, exhaustion print, exhaustion print. Let me see. Let me take a look at some of these questions. Henrik, let me see. Your lowest column in screen are currently volume. Rows. Okay, I'll have to come back to that question, Henrik. Rows instead of columns. Okay, these currencies are breaking down a bit. Now, let's see here. Ethan asks, on your entries, do you give much weight to the current bar delta as confirmation? Would you disqualify a move off a naked VPOC because delta is pushing in the opposite direction? Okay, thanks, Henrik. Let me just read this question again. For example, would you disqualify a move off a naked VPOC because delta is pushing in the opposite direction? No, I wouldn't disqualify it. For me, depending on what the delta is, let me see if I can find something here, Ethan, that would sort of confirm it. Let me see. So for example, if, like here, okay, we have this, well, when you talk about VPOC, I assume you're meaning the individual point of control. Like this is a point of control, a virgin point of control, right? It wasn't touched in the next bar. The bar's got positive delta. Honestly, I wouldn't be concerned with what the delta is because it's the point of control, right, is the point with the most volume. And it could come either on the bid side or the offer side. And there's going to be times where, let me see here, well, not that one, but here, right? You have that VPOC coming in up in here, but you got positive delta on this red candle. Actually, so what's happening is you're seeing, that absorption coming in here, right? You got positive delta. People, why you got positive delta on a bar that's going lower? Well, the reason you got positive delta is because you had supply coming into that market here. And if you got that supply coming in, it's going to absorb everything, all this buying, right? And it's going to, as a result, it's going to leave positive delta down in here, because you're going to see, well, look at this bar, right? It's got delta of 68, max delta of 89. We're closing, much closer to our max delta. Our min delta is just -2. So sellers were never in control. Well, sort of where it gets, people sort of digress is when they look at delta and they think buyers or sellers. It's actually aggressive buyers or aggressive sellers, but you still have passive buyers, passive sellers. So just by looking at this bar, the eye test, you're looking and say, oh, I got positive delta, right? We should be going up. But really what you have is absorption taking place. So sort of to answer your question, is no, I wouldn't put a whole heck of a lot of weight in there. Yeah, Adam, would you take a buy now in euro on that the stacked buying imbalance? Yeah, if the stacked buying imbalance is going to hold, I do got an exhaustion print. I've got a double bottom coming in here. I do like the fact that it sort of tested it. It started going higher. It's coming back. It's testing it because, again, if I've got stacked buying imbalance right here, right, I've got aggressive buyers. I want to see these buyers come back in. If these buyers are going to come back in, right? I'll put a buy stop in here. Okay, to get me in. I can see it's holding. I've got a bullish prominent point of control coming in right here. This bar, right? It's got nice positive delta, 81. It's closing on our max delta. It's got small min delta. This bar happened very fast right here. It's got delta of 20, volume's only 50, but it's giving me some nice bullish readings. I do like, obviously now we have this, what do you call it? The abandoned value area coming in here. I've got the abandoned point of control, and it's a prominent point of control as well. So yeah, that's what I like. Let me see here, this question. Renga asks, imbalanced red goes down in 6B, whereas 52 blue in 6D did not went up. Let me see if I could find that here. 60 imbalanced red goes down. Renga, I'm not sure which point you're talking about there, but 52 blue. Let's see if I find 52 blue. Oh, this one is probably what you're talking about. Did not went up. Okay, where people sometimes get, I'll say confused sometimes, is an imbalance alone by itself is not always a reason to take a trade, right? You sort of got to wrap it into everything else that's going on in the market. Okay, like for example, okay, just sort of going back here, I just got to keep my eye on this euro currency. Okay, I have this imbalance of 52. I have this imbalance of 22. Right, this is bullish. Right, you're thinking it's going up, then it runs up in here. You even got in this next bar at 70.5. You've got this buying imbalance at 37. Okay, so I got some aggressive buying on this way up, right? which, okay, is what I'm expecting to see. But the market price starts coming off that, starts trading down. So what's that telling me is I know that there's supply coming into the market, right? Here's, 241, right, against 41. The market sort of held that area, okay? It's just rotating around. Again, just because you have an imbalance one by itself doesn't always mean the market has to move in that direction. It can be a sign of either selling, supply coming into the market, or it can be support coming into the market, right? But it doesn't always, it's not always going to hold, forever, so to speak, right? Because the market conditions will change. Okay, so here, right, I've got long off the stacked buying imbalance, off the pop back up, but now I'm starting to see some bearish things happening in the order flow, okay? I got this exhaustion print. We got within one tick, right, of I take profit, okay? Then we kicked in this exhaustion print. Now I do have this unfinished auction here, the 2 lots. We're pulling back, now we're back up to that area, 63.5, 64. Again, it's coming in here at exhaustion print. Now I'm trading a little bit more volume this time around. Back up to 3, 4. Hasn't really gone 3.5 bid, goes 3.5 offer. Let's see. Bid's kind of thinning out. Well, traded 1. But this bar, if I wasn't talking to you guys, I'd probably want to keep it a little bit longer. I don't like that. It's just hanging. This is the frustrating part where it trades your price, doesn't fill you, because it's Q system. Finally, it fills you. I don't like that. It came up there once, came off, came back up, traded. But this is one of those things where people always say, is there luck involved in trading? Not really, but this is really where, when you talk about luck involved in trading, where you saw the take profit was there at 64, but it didn't get there, right? It got 63.5. I've had a lot of trades over my life where it gets within one tick, and then reverses and goes back down and, basically stops me out. I like to think they even out over time, but unfortunately there's no other side where it does work out for you, where you sort of get, like in football, right, soccer, sometimes, the ref calls a penalty or doesn't call a penalty, and the old adage is, well, they work out over time. Well, in trading, it doesn't have like the opposite effect. It doesn't get to your take profit. It either gets there or it doesn't. But when it sort of gets up there and then just starts going sideways, for me is often a sign to look to get out. But sort of recap this trade again. Thanks, Vadim, for pointing it out a little sooner than I noticed it. There was a couple of things happening in here on this trade. Okay, first of all, this is a double bottom here, right? Now this is a range-based chart, but you have 40 the first time. When I look at double bottoms or double tops, we'll start with a double bottom. What I look for in a double bottom is I look at the bid side, the bottom of the bid side. Then I look at the bottom of the bid side the second time. First time is 40. The second time is 2. So I know that when you're retesting the low, I'm not talking about low of the day, but the low of a move, and you're doing it on less volume, then it's the sign that you don't have that same selling pressure that you had earlier. But then you add to that this nice stacked buying imbalance. Okay, so I've got the exhaustion print. I got the double bottom with less volume. I got this stacked buying imbalance. These are all signs to potentially get long, as well as what's happening here in the delta, right? We're closing on our max delta, 81. Max delta is also 81. I've got a min delta of -1. So the delta is magenta color. The min delta is white. So I know that I have this trade-off of the market closing on its sort of extreme max delta, and you have no min delta. And we're forming a swing low in here. And then obviously the delta volume is 59, which is quite high. It's 137 contracts traded, and the delta was 81, which gives you a ratio of 59. I have my default set at 25, but when I see strong numbers, depending on the market that you're trading, you might see, you look at some grains, soy meal or bean oil, you can see bars that have it 100%. It's just sort of one-way markets. But in regular markets, when you see sort of this high delta volume and it's coming in off of a low, that is often a nice bullish indication of what can happen in the market, right? It can continue. Now we did go up, 59.5, 60, came back down. We tested this imbalance. Anytime you have a stacked imbalance, you want to, it's normal for the market to come in and retrace. Okay, I'll just leave it at that. And what you want to see is there going to still be aggressive buying coming in? And we saw that aggressive buying. You see the 12, it's 2 against 12. It's not like, 2 against 50, but that's what the volume was. And the market shot up immediately. All right, this bar closed very fast. You even had another imbalance, and then it started working its way up, up, up. Right, more buying imbalance, more buying imbalance. 3 buying imbalances in here. Right, and what I liked here as well is you got that value area that's abandoned. You got a bullish prominent point of control as well here. That is also, a virgin prominent point of control. John asks, do you find that factoring in trends helpful with order flow? Yeah, it's looking at trends. I mean, obviously, there are major trends, and there are smaller trends. I don't necessarily like to fall into this. Trends can lead you on sort of this bias trail, where if you're looking at the overall market movement, like on a daily chart, so you see this trend of, the market's been moving up for a while, or the market's been moving down, and it's like, okay, well, market's heading down. I'm only going to be looking to take trades to the long side or the short side. I think you leave yourself exposed to missing out on some trades in that regard. Now, I do watch for, these trends. Markets go up and down during the course of a trading day. For example, right, we're trending down. Anytime I'm look like we're potentially found a bottom, right? What makes this bottom more bullish than, say, this bottom is what's happening in the order flow, right? This order flow here is still bearish, actually. You got the 2 exhaustion prints. Obviously you got the red value areas. Here, you got the exhaustion prints, the bullish ones, right? They're at the bottom of the bars, right? Bearish ones are at the top of the bars. And I'm seeing, even though the value areas are sort of alternating red and green, the fact that we're leaving these green ones sort of exposed, I got the bullish prominent point of control. I'm seeing, obviously those imbalances. This balancing area, this low area, is visually more bullish than this area, right? I'm not necessarily looking to, yeah, this bar looks, could be bullish, okay? But then it comes back with the bearish bar and another bearish bar. There's no reason to be buying that low, whereas this low gave you, more reason to buy. Okay, so let's take a look here. You always trade with fixed take profit. Doesn't order flow give you an advantage to time your exit and avoid those losses by one tick you just mentioned? Yeah, Horatio. I always use the ATM, right? You have to. For whatever reason, you have to put a take profit and a stop in after you get into any trade. Sometimes I fire the stop and I forget to set my ATM and I take a trade. Then it doesn't throw in the stop or take profit. Then I go, what I do? And sometimes it's one of those things where it just becomes it's a habit, right? Because machines do go down, internet do go down. I do have everything on battery backed up. I do have. I'll answer your question, but I do have a whole house generator and all that stuff in the event of any power outage. But I remember there's been times where I've been staying at visiting my parents and trading off a laptop. Their internet, it was a fine internet connection, but it hung up on me, and I was in a position, and I didn't have a take profit. This was 10 years ago. I didn't use the ATM. I didn't have a take profit or a stop in, and the Ninja Trader hung, and I'm in a position. I'm thinking, this is one of those times where it did work out for me. I literally had to shut down, restart it. This was Ninja Trader 7, and if you guys remember Ninja Trader 7 compared to Ninja Trader 8, that one was a lot slower. So it shut down, and restart because the system hung, so I had to do a force reboot. It took a couple of minutes to get back up, and fortunately the market had moved in my favor. I just got out of the trade. But, systems do crash on you, and you still got to at least have something in for worst case scenario. And the good thing is it sits at the exchange level, right, which is where you want it to be. In case you do lose connectivity, at least you have something in there that when you do get back up and running, you got something working. But yeah, I mean, for purposes like this, I do have a little bit tighter take profit and stops because, like I said, it's difficult talking. When I trade, I just trade by myself. In my office here, kids are in school. I don't have distractions. Sometimes my wife will come in and ask me something, but I'm able to sort of focus more, and I can sort of watch what's happening a bit better in the order flow. So, for example, like this trade that I took, right? Honestly, I was really expecting it to go a little bit higher, possibly above 70. But then when I see what's happening here in the order flow, right, I sort of come up in here, I've got a bearish order flow ratio, this 0.62. So it's telling me there's stopping volume coming in at this market. So I had to move up. Then I'm running into stopping volume, right? That's not a good sign. So, if I had a wider take profit up here, or if I was just sort of managing it, moving my take profit up and up, running into this, I would have probably gotten out around the same area, maybe a little bit lower, because I do know that I'm running into this stopping volume. Okay, now the market did go 2 ticks higher. Then I got the exhaustion print, and the market sort of came back down to that area. I've seen it enough times where I know that if I'm running into some stopping volume somewhere, it's not going to be I don't want to fight it, right? You don't want to be going upstream. But yeah, oftentimes, I have a take profit and a stop in, but I do adjust them based on what I'm seeing in the order flow. But again, it's difficult sometimes trading in an environment where you're trying to explain things on one market versus another. So yeah, I do have that a little bit tighter right now. Ignatz, are the target and stop always fixed at 8 in the currencies? No, no. I said for today's purposes, they are. At 67, was it zero print? Okay. No, that's not a zero print there. Zero print would have to be on the offer side, on a down candle. Vetting. Do you have ever used a dome? Okay, well, let's go back to these other questions first. Have you ever considered using a remote VPS? Yeah, I did for a while. When I was overseas, living overseas, I did. But, you know, I'm in the Chicago area right now, so it's actually, my connectivity is pretty good, as well as my distance to the exchange. And, you know, honestly, you know, I'm entering a lot on stop limits, and then I have, you know, my take profits, obviously a limit order. It's not going to make that big a difference. You know, I'm not scalping 100 times a day where it's going to make that big difference. But when I used the VPS, it was more for connectivity, because it was very slow when I was in Asia going to the US. And again, you know, sometimes the connectivity isn't all that great, and I'd have to log out. David, what's your ATM? Well, right now, I've got several ATMs. I'll just sort of go through. ATM 1, you know, I'll just sort of go show you. ATM 1, which is what I would normally use, like in the MES, ES, is 20 and 20. But again, these are adjustable, right? Then I have a 10 by 10, as is a 8 by 8 as well. But again, everything is flexible. It's not like I have to stick with 8 by 8 when I'm talking. You know, doing these things, it's just best to have something in there. Have you ever used a dome in conjunction with the footprint chart? Yeah, you know, honestly, I've looked at a dome very much since domes were invented. And this is when electronic trading first started up, right? We had domes. This is back in the 90s. And, you know, honestly, it can be misleading for a lot of people, right? Because, you know, again, don't get me wrong, there's nothing wrong with looking at a dome if you know what to look for. Sometimes it's easy to see things in there that can mislead you. And, you know, just the other day, I saw there was some traders in Europe on Euronext, the BTP traders, right, the Italian bonds. They just got stitched up. This happened in 2016, but they just, you know, the final verdict and their fines and all that stuff came out. You know, they were spoofing in the Italian bonds on Euronext, right, which is the old life exchange. Basically, you know, simple spoofing. They have an order to sell 36 contracts, put the offer in, market drops down a little bit. So they put a bid for 400 contracts in, you know, 2 ticks below the current bid. So the market would respond and trade up, and they cancel that bid. You see that a lot still. Honestly, you know, even though it's not legal, people still do that to some certain effect. But yeah, I do look at the domes, but yeah, it's easy to get mesmerized. To me, having a dome, I describe it to a lot of people as having a dome, unless you're a dome trader, it's like having a slot machine on your desk. Yeah, Horatio, I am, like I said, I am a bit more flexible when I'm not talking, I guess is the way is to say it. But you know, as I'm talking, right, there were some nice trades coming in here in the British pound. I saw that Vadim says he took a nice trade, just long on the British pound, looked like absorption coming in. Yeah, you know, this here, obviously this nice bar. Yeah, there's actually a nice little long scalp up, then a nice little scalp down, then back up. But I always like this. Look at this bar, these two bars here. To me, these are very telling. This one actually more so than this one. And the volumes, okay. Well, first we'll start with this bar, right? 54 on the bid side, right? You got bullish pound and point of control. 36 here. So 54 and 36 is what, 90. The bar's volume is only 160 contracts. So that's what, 56% of that volume is appearing on the bid side, right? So that, to me, that stands out, right? That's a lot of volume relative to the whole volume of the bar. So that's telling me there's some liquidity, so to speak, but I have passive buyers sitting in here willing to buy it, right? And this sort of goes back to that earlier question, delta, right? The delta is negative, but you got a nice bullish prominent point of control. You know, the Virgin, the VPOC here, right? We're trading above it, but you got that negative. Well, I've got that negative delta as a result of that buying that was taking place in here, right? The 54, the 36. And by buying, I'm talking about passive buying, people sitting on the bid here to absorb it, right? The market was selling off. Then it hit an area where people just bidding, right? Then the market reversed and started going back up. It did reverse up here, started coming back down. Again, you've got a bearish prominent point of control. So it went from bullish prominent point of control up to a bearish prominent point of control, reversed. Again, it's an abandoned prominent point of control, Virgin, a VPOC, if you will. Obviously, the value area as well. Traded down to a similar bar, 20 and 14. Right, the two heaviest volume points on this bar are at the bottom, 80 contracts. This is 34. It's not as pronounced as what you're seeing here, but it's still, you know, above 30% of the volume. Market starts trading up. Now we're getting a sequencing taking place here, 4, 8, 10, 12, 29, and then you got 52 up here. So the aggressive buyers are in the market, all right? Buying and balance, buying and balance, buying and balance, buying and balance. You got the zero print coming in here. And then another zero print in here. Obviously, the value area, value area, value area, over 3, actually over 4 bars. It's not something you see all the time, but you know, you see 2 quite often, 3, but 4 is more of a rarity. But you know, the market is shooting straight up. But that was a trade I wish I was able to take advantage of. But as we're talking, right, similar thing here in the euro currency, right? Value area, exposed, value area, exposed, value area. Started to be exposed, then it sort of came back in. And we're working back up. Now we got up here, we're up here at the swing high. We'll see if we're going to reverse. But it was a move from 62 all the way up to 82. So it was a 20 tick move. But now we're starting to come back down. Okay. Gap in the value. Exhaustion print. Right, we're seeing some decent volume go through, 398 here. It's pretty evenly spread, right? Delta is only 4. Okay. Let me take a look at some more of these questions here. Ethan asks, when you're setting your stop and targets, are you using any metrics like current ATR, standard deviations to gauge the current market personality? Well, I know that based on the market that I'm trading, I already in my mind, I have a set level of what I think the volatility should be for that market, right? Based on how it's been trading. Okay, so for example, if I'm in the currencies, right, my ATM is going to be different than if I'm in the gold, right, or if I'm in the MES. So, you know, similar type activity here, as opposed to what happened earlier. Trade was it? I'm getting confused here. It's, sort of forming a balance area breakout, forming a balance area breakout. Now we're seeing the exhaustion print come in here, right? Oh, it was the British pound. All right, let's talk about earlier. Find my trade. It's too early. Right? Remember, on the British pound, we sort of formed this balance in here, started to gap down, got that exhaustion print. Here we're forming a balance, gap down from this balance area, this gap between here and here with the exhaustion print. Here's your balance area. You're gapping down in this bar. Then the next bar, the bar with your exhaustion print. Market sold off. You're seeing the same thing take place here in the euro currency. Let's go back here. Whoops. 906. Yeah, Vadim says large aggressive selling at the bottom, but price jumped back. Yeah, you had the aggressive selling coming in here, and then it jumped back up. It's when you're looking at range-based charts as opposed to a time-based chart, you can see here this movement, right? 912.43, 912.52, 913. 15, 913, 16, 913, 16, 17. This move is basically from 75 all the way up to 86, 10 ticks. That happened within 10 seconds or 15 seconds. Whereas on the range-based chart, you're seeing it's a bunch of bars. I mean, honestly, here's 913, 15, 913, 16, 16, 17. So you got how many bars? 1, 2, 3, 4 bars taking place in 2 seconds. But that's what you run into when you're using a range-based chart. All right, so let's take a look here. Euro currency. So we had that move down, right, from our swing high. We do have a buying imbalance here, 117. Okay, we do have a selling imbalance up here, 34. It's honestly, if it was the opposite, if this 117 buying imbalance was up here and this 34 was down here, I'd find that a bit more bullish than the way it is here. But right now, I think this market is probably just going to go sideways a little bit. Starting to break down. The euro currency, the British pound. Again, we came up sharply to our swing high up here, starting to come off. Got the exhaustion print. We've got the abandoned value area here, right? We've got a zero print coming in here. It's, value areas are moving lower. You do have a gap in value here. If how I'm looking at it is I'm kind of expecting a move to sort of take out all of these abandoned value areas in here. But I'm not overly convinced. I have a feeling we just had that kind of a sharp move up. I'm not looking for a sharp move back down. If anything, I expect it to just sort of peter out and potentially go sideways for a while. Euro currency is sort of grinding its way down now. We got bearish prominent point of control here, bearish prominent point of control, but we don't have the exhaustion prints. I like it better with exhaustion prints, right? When I have a prominent point of control, either bullish or bearish, I do like it to be sort of capped off with an exhaustion print. But, nevertheless, you can only trade what the market presents you. Well, yeah, no, I'll take a look at MES in a minute. we'll go through that. But again, it's the same things that you're looking at MES with currencies, bonds. It's not like it's MES that it's going to be something so different. No, it's still the same things. On ES. So for example, right, this is my MES chart. Okay, what do I got? Right, I've got my exhaustion print here. I've got my bearish sequencing. I just find, people ask, what's the better market to trade? Well, yeah, you could trade MES or ES or NASDAQ, but there's going to be times where you just hit these periods of extreme volatility that you have no control over, right? And you're just going to find yourself often caught in a move, getting stopped out, the market reverses and goes your way. I just personally, I find there's other markets, sort of, I'll say low-hanging fruit, but markets that are just going to, sort of allow you to position yourself, much better. But just sort of the similar things, right? I've got stopping volume in here, right? The 54, right? The ratio of 0.44, 0.63. I've got my value areas here, right? It's 2 in a row, right? Which to me is bullish. I'm looking for this market. I think it could go higher, right? From this 45-ish area all the way up, potentially to 50. But it's probably gonna take take a while to get there. But we'll sort of try and structure it. One day on currencies, one day on bonds, one day on I'll try and take a look at the MES and gold on on Wednesday. But again, it's the same things. It's not anything so radically different, whether it's MES or MNQ, Euro currency, ultra bonds. It's all relatively the same, You're still looking at the order flow. And Rick, do you normally look at 10 to 20 candles, take your trades from? Yeah, I don't need to. I don't look so much at, for example, won't go so far back. I'm just really looking at the most recent activity. 10 is kind of short. Using 1, obviously, might as well just be looking at a dome. But, I like to at least have an idea of where a swing high and a swing low was. I like to be able to identify that. But it's not set in stone that it's got to be, 10 or 20 bars. I just like to know, okay, if I'm getting short, where can this market go? If I'm long, where can the market go to? Okay. If I'm going to be running into anything, so to speak. I entered at 905 bar long at 122.70. 905 bar. Yeah, here, that was a good trade. My problem is stay without exiting too early. Well, one of the things to keep in mind is, because it was a sharp move up, right? If you're getting in here at 70, we did jump up pretty quick all the way up to 123 even. Anytime after a sharp move, we start to get a little bit of a pullback. To me, that's a potential sign to get out. Once we start petering out, sharp move, then the down candles come in. To me, that's the sign to sort of get out. Because what's going to happen is you're going to hit that apex of the move, and chances are it's either going to reverse and go down, or it's just going to go sideways. And after our sideways, it can go back up. But a sharp move, meaning a quick move, is a gift. Just take it, right, at first sign of weakness, because there was a lot of strength that came in with the zero prints, obviously with VPOX, etc., coming in. to get up, and then you just sort of paused up in here around the 95, 96 area. That's your sign. Just jump out. Unfinished business, how to recognize it, how to trade it. Okay, well, I can talk about that right now. Okay, so we'll take a look here at euro currency. Now, unfinished business, right? It's the unfinished auctions, basically. Now, we do have a function on the software. If you were to scroll down, unfinished business, detect unfinished business. This would be like the current unfinished business. Detect, draw broken levels would show you like all the previous ones, but it would just make your chart very messy. I don't think you really need to focus on the broken ones. See this, all these dotted lines are the levels that they've already finished, so to speak. So I'll just keep it up here as this. And I don't trade or necessarily trade around unfinished business in the sense that, oh, there's unfinished business here. I'm going to trade it. What I like to see unfinished business, if I'm short in a position, right, and I'm trying to let it run. Right? So where it gets onto letting a trade run. So if, say I get short in here, right? Say I'm short in this bar. I should have been, but this bar finishes with unfinished business. This bar finishes with unfinished business. I'm short. I'm still running it. Then I see unfinished business, unfinished business, unfinished business on the downsides of these red candles. Right? That's telling me, the market is searching lower. It's bouncing up. It's searching lower. I don't use it the way it used to be used, in the past by, the sort of the original group of footprint traders. Is, they would see this unfinished business, at a level and wait for the market, drop an offer in or a bid in, depending on what type of unfinished business it was, waiting for the market to go back to. I just don't, now the way the market trades obviously is much different than how it used to trade, 8 years ago, 9 years ago, 10 years ago, where a 20-point move is a big move for the day in S&Ps, whereas now you get a 20-point move in a minute or two. So it's just one of those things where I don't use it. I'm not a big advocate of it, but, I do like to see it. Like, again, if I'm short and you see unfinished business, unfinished business, unfinished business, unfinished business, they probably want to keep me in the trade a little bit longer. So here, now we got that nice sell-off taking place there. All right, just I'm getting back to MES, right? Like I said, right, you had the stopping volume, the VPOX coming in, looking for the move up to 50, right? We got that move up to 50, literally just got up to 50 and a quarter, and now it's starting to come back down. But you're looking at the same things, right? Okay, so let's see if we can get another trade going on in here. So British pound, what do we got? Well, we've got a exhaustion, we got this little bounce, sold off, bounce back up. I've got my bearish pound at point of control coming in here. Where euro currency is selling off. British pound hasn't really started to sell off yet. But on our bounce back up, we got the exhaustion print. We got an imbalance reversal. It's probably worth a shot. I don't mind selling it at 88.
Order filled.
My stop is going to be behind this area up in here. 89 probably would have been a better place to sell, but nevertheless, I do know that I've got this bearish pound at point of control. But if we can get past it, and we're going to get past this exhaustion print, I probably don't want to be short anymore. So that's why I have my stop right there. Again, on a 5-range chart using an 8-tick stop, in my opinion, is fine. Because you also got to take into account the type of chart that you're trading. So yeah, it's going against me. Up to 93 right now, 93, 94, but 94 is that bearish pound opponent control. You know, there might still be those sellers up in there. This move here in the euro, it's kind of nice. Exhaustion print. Here, the 3, the 2. Let's see here. Well, you know, this 93, 94 area is going to be key in the British pound. Let's take a look at some questions real quick. Does bid on the left side of the bar mean buy and ask on the right side? Does bid on the... So does it have a dual meaning? Well, it's... Think of it this way, okay? There's a bid and there's an offer, all right? And the volume that you see traded on the bid is volume that was sold into the bid, but at the same time, you have passive buyers, right? You have somebody working a bid for the sellers to sell into the bid. Okay, so I got stopped out there, right? Okay. Let's get back to this question. On the offer, right, you have people that are going to be working bids and offers. Those are the passive buyers and the passive sellers. Someone working a bid is a passive bidder. Someone working an offer is a passive seller. The aggressive buyers are the ones buying the offer from the passive seller or selling into the bid from the passive buyer. Okay, so even though you have buyers and sellers, you have different types of buyers and sellers. You have, you know, passive buyers, you have passive sellers. Okay, so here, the British pound real quick. I've seen some interesting things develop. Let's move it over here so it's a little closer to my microphone. You got these buying imbalances, okay? And you got this 82 lots, all right? The selling imbalance. So I know that I had a bidder coming in here, right? A bidder was present, sort of going back to that question, you know, there's volumes on the bid, volume on the offer. So when I see this imbalance, 84 or 96 against 16 in the two-way auction, I know that there was, you know, some strong bidding coming in, okay? So here we go. We just got with it just stopped me out by a tick. Then it's starting to come back down to, you know, my entry was what, 88, back down at 91. We'll see if it's going to sell off again. But again, this technically is not an exhaustion print, this 3, because it's a doji candle, sort of open and close at the same level, so it won't print it there. But you know, again, this 97 is sort of, it's got my attention. If this 97 wasn't there, you know, I'd probably be again looking to get short again. But you know, we'll see. We're sort of in this area where again it looks like it wants to break down, but we're sort of forming. Again, we're not overlapping the value areas, because it's just sort of value area high, value area low, value area high, value area low. Well, I'm seeing that exhaustion print come in here. I'm seeing this imbalance, 2 against 55. But again, we'll see if it's going to start to break down or not. And my previous entry was 88. See if it can get down a little bit. John says, yeah, it looks like the value abandonment seems a good way to trade trends when the second candle confirms a close in the direction. Yeah, I do like it when you get 2 in a row. To me, that's a nice a nice sign. Okay, so we're back down to where my entry was there at 88. Now this bar, okay, you got that imbalance here, 9 against 56, the exhaustion print coming in as well. Again, it's not, to me, this is like borderline balancing. I don't like that. It's just right over, where the value area high of one bar meets the value area low of the next bar. But again, I'm starting to see some bearish things in here. Like I said, that imbalance is nice. We got two selling imbalances. John, do you prefer range charts over time-based charts? I use range-based charts. Yeah, John, I do like them both. Let's drop a limit in here at 87. See if we can get one off here at 87 or not. Just right below my 88 from earlier. I use them both. On a separate screen, I've got the minute-based chart, but for here today's purposes, I'm using the range-based chart. And again, it's a personal preference on which one you want to use. I don't want people saying, well, Mike uses range-based charts or Mike uses tick-based charts. I got to use that. No, experiment, find what makes reading the order flow a bit easier for you. So that's, this is what I talk about with trading, right? I got short at 88 and my stop was up here at 97, ticked me, but then now it's making that move that I was expecting it to make. Stop it. I wasn't able to get my fill there. Ignat's daily high and daily low from the day before. Do you look at? I used to look at the previous day's highs and lows. I used to have them on my chart. You can. Having a reference point, whether it's today's high or low, yesterday's high or low, let's cancel this, is important, right? You want to have some reference point and have an idea of where the market is trading relative to the high or the low. Okay, on these charts, today I didn't put them on here, but I normally keep the daily high and the daily low, the day's high, the day's low on my charts. It's the day's high, the day's low, to me is, market, I say market generated information. Obviously it's the high or the low for a reason. And if you're going to be coming back to a high or a low, then, you want to be seeing, watch how the market reacts to it. But can you use the previous day? Of course you can. I used to keep them on my charts, but then I just, over time, I've always concentrated more on the day's high or the day's low. Mac asks, it always confused me, even when I've watched a few courses I've bought over time. Mac, what's your question? Okay, well, I hope I did answer your question there, Mac. That was the bid and the offer question. So think of it like this, Mac. An easy way to remember is you go to a grocery store. Okay, you're a buyer. Now, you go there with a shopping list. All right, you're going to be an aggressive buyer. You have to buy those things. Let's say you're shopping and you see things on sale. Toilet paper is on sale. You don't need it right now, but you're willing to buy it if it's a low price, right? In that case, you'd be the passive buyer of the toilet paper. The grocery store would be the aggressive seller. They lower their price to find buyers, right? But you need eggs and bread. It's on your list. You got to buy that because you need to eat. Right? You want to make an omelet and toast, so you have to buy it. So you're the aggressive buyer. In that case, the grocery store is the passive seller. Can you look at wheat? Yeah, sure. Let's pull it up on a different chart. Wheat. Okay, this is wheat. Again, very similar, right on the swing low, things that stand out. Bullish bound at point of control. Look at this volume, 1834, right? It's almost half your bar's volume at these two price levels. Market had a nice move up. Value area is abandoned there. Next bar, same thing, abandoned value area. You got some support coming in here. Obviously, you got the stopping volume with that ratio of 0.53, right? The heaviest volume at the bottom of the bar, 34. Right? A nice move up. Earlier, right, you got these these bearish bound point of controls coming in here, kicking off abandon. This is a 5-range chart. I also I look at wheat on a minute-based chart as well. So let me just switch in here. No, on the minute-based chart, it looks a little bit different. On this minute-based chart, right, here's just a doji candle. There's your 34. You don't have that bullish point of control that you had on the range-based chart. So this sort of gets back to the question, which is better chart to use? Well, on a range-based chart, you're going to see things that you might not see on a time-based chart and vice versa. So it's about finding, sort of the chart that works for you. When you're using a time-based chart, do bear in mind, especially on markets other than the main markets, right? You're going to get these periods of, I don't say illiquidity, but periods where the market is just quiet like this, where you're just trading the bid and the offer, right, over these two bars. On a range-based chart, these are just going to be all formed into one bar. But over this time, it's trading basically 4.25, 4.5, 4.25, 4.5, right, for a couple minutes, just going back and forth. When I'm using a time-based chart on a market that's not moving, I do start to look for other clues. Oftentimes in the delta, point of control on a market that's not moving isn't going to give you much information, right? Because if it's just trading bid and offer, well, one side's going to be your point of control, the other side's not. But I'll tend to look at, for increases in delta, things like that, some sort of sign. So just going back to the 8:30 open, wheat, again, started coming off. Here was a bearish slingshot point of control, bearish prominent point of control as well. Couple buying imbalance is coming in here, which is bearish, telling you supply is coming in, and the market had this nice sell-off. Here you had a bullish engulfing value area. And the market, again, it tried to move higher. The next bar was a green candle. Then this next bar up. It just couldn't muster any move, and then sort of failed and made that new low. And then sort of worked its way back up. But, on this type of chart, look for these prominent point of controls. Look for the abandoned value area here. Prominent point of control, abandoned value area here. Giving you some decent trades. This one potentially could have been one. You've got your prominent point of control, and you've got your abandoned value area. The thing that bothers me about this bar is this 20 lots in here. I'd rather have seen it on the bid side than the offer side, because what's happening is just telling me there's an order coming through the market. It's like hitting the bid 23, 24. 3, 5, and 20. It's almost like somebody had, 60 contracts to sell, and it's just sell them, starting at 5.25, just almost at the market. They just hit these bids, move going down, and then they turn it offer here, and then they're done. The market's snapped back up. If I was looking at this being support, this 20, it would have to be on the bid side, not the offer side. again, you don't have that you saw on the range-based chart. All right, on the range-based chart, this was a very bullish period in here. It's sort of working its way back up. Again, prominent point of control, abandoned value area. You go down, a little bit, sort of takes us back up to where we are right now. Yeah, this was interesting. You've got this bearish value area, bullish, followed by a bearish, but it just went sideways on you. Let me get back to these currencies here real quick. Okay, so we're starting to bounce back up a little bit here in the pound. Back up to 86. Euro currency. Well, again, you got some bullish things coming in here. Right, you got your zero print. Now this is your swing low. Right, it's coming in at 46. Nice. What's interesting is as you're in this low, right, you've got that positive delta. Right, you got the red bars with positive delta 1, 2, 3, and it's just going sideways on you. Okay, I do like that you have this sequencing here. Then it started to go up, but then again, it's just going sideways on you. I would not call this a double top, even though technically it is. I mean, it's in an area that we've been trading, the last 5 minutes. 62, 26. Okay, it's less volume. We've got this value area right now that's kind of exposed. We just traded into it, but you have a bearish prominent point of control. Right now, this just looks more like a market that's going sideways. One of the ways I tell is when I just start seeing alternating bars, red, green, red, green, red, green. It's just going back and forth. If anything, if you had a gun to my head to take a trade, I'd probably be looking to the upside. But again, at this point, I think I'm mixed on that, on which way this one's going. Where are we here? British pound. Again, I tried to sell those 87s. I didn't get it. The market sold off, came back up to 86. Then it's, back down to 79. But again, I'm biased to the downside, if you will. I got the exhaustion print here. I've got this, where's my glasses? This bearish slingshot point of control, okay? And, market's coming back up. It's testing these zero prints in here, right, which is 87, 88. We're still below this area in here, right, where you have that value area being exposed. Right now we're forming a bearish prominent point of control. If anything, to me, this is more of a market that wants to go lower than what I'm seeing in the euro currency. Right now we're starting to take a little bit lower. Chris, bond auction at 1 today. Yep, it's Monday. Let me just go through some of these questions here. Again, I'm more biased to the downside right now. It's looking more bearish on the euro, on the British pound. Can you explain the term hit the bid and lift the offer? Okay, when you hear the term hit the bid, that means someone is selling into the bid, either a market order or they're just, the market is 5 bid at 6. Okay, I sell you at, they sell it at 5. That's hitting the bid. You hit a bid, you lift an offer. An offer is a higher price, so you think of it in terms of lifting, I guess. But the terminology, I think the correct terminology, and we've sort of gone away from this when the floor is closed, right? I do watch, other people. I do have friends that have rooms and stuff that I go in and, I got to buy it at this price, or sell it at this price. How to say it? Let me catch my thoughts here. Anyway, to answer your question, you hit the bid, right? is selling into the bid, right? Selling at the market. Lifting the offer, you are buying at the market. You are buying the current offer price, whatever somebody is selling it at. Okay. So that's how when you say hit the bid, when you say hit it, you're selling. Right? If they lift it, you're buying. And again, it's just terminology, but just, you're buying when you're lifting an offer, you're selling when you're hitting a bid. Chris said, is unfinished auctions the same as tweezers? No, it's different. So for example, right, this is unfinished auction down here. Tweezer tops, tweezer bottoms are basically double tops, double bottoms that happen on long wick candles. So again, we've got this nice little sell-off developing here in the British pound. Exhaustion print, exhaustion print, exhaustion print, 3 in a row. You also got this up in here, right? You got that bearish prominent point of control that's just sticking out like a sore thumb. And we're working our way down quite nicely. What prints designate unfinished biz? No. Unfinished business means there's volume on both sides of the bid and the offer. Like you see here, 18 and 1. So on the bottom of a red candle, if you're looking at the bottom of a red candle, this is a finished auction, right? There's 0 volume traded here, right? It's 17 and 0. That's a finished auction. Unfinished auction is volume on both sides. Okay, so you can see here 18 and 1. Well, this is unfinished area, unfinished business, because it was 39.5 offered at 40. It just didn't trade 39.5, but it was offered at 40. All right, so you're looking for that next bar, or if this market were to reverse and go back up, you're looking for the market to come back here and close that auction. Right, finished auction, finished auction, finished, unfinished. Finished, 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 unfinished. But I'll ask, any specific criteria to identify stopping volume? Yes. I'll just go in here. This is what we have that's what the order flows ratio is all about. Ratio bounds high and a ratio bounds low. Price defense. So a number 0.69 to 0 would indicate stopping volume, which is price defense. Okay, and this is something I used to calculate by hand, on a calculator. And really, and this is one of the, again, I talk about the exhaustion prints, I talk about the imbalance reversals, but these ratios, these order flow ratios, also on the original version of the software that we had since we first released it. Then a lot of people copied it, okay? But it's interesting because they copied it and they didn't really understand it. They just figured they got these ratios up there because I have them up there, right? So, they got to be useful. But really, the way I look at them is the main way, there's 2 ways, is after a move up, right, or a move down. The first sign of reversal, I'm looking, is there stopping volume? So for example, here, this move up, 0.7, it's a red number, and it's between 0.69 and 0. It can't be 0, it can't be negative, it will never be negative. If it was a 0 print, it would be 0. And basically, I'm just looking, is it within that ratio? It's going to tell me there was some stopping volume, and it's measuring what's happening in the top of the bars on red candles or bottom of the bars on green candles, okay? And if I see that, to me, that's a sign that this market, there's some volume up there to stop this move, to arrest this move from higher. Now, people ask, does the ratio, is the stronger it is, like the bigger it is or the smaller it is, matter? No, it's a ratio, okay? So really, I'm looking for it to fall within a certain range. Okay, so, and I've determined over time is 0.69 to 0 is stopping volume. Just as I determined that 30 and above is price exhaustion. And again, where you want to focus on them is at turning points, okay? So for example, if there's any, a lot of times you're seeing these black numbers, right? That's just your normal order flow that's going through, right? So here, high of the day right up in here, stopping volume 0.55, right? It's reading what's trading in the order flow to tell me if there's stopping volume or not, right? If there's stopping volume, then I'm not looking for this move to keep going higher. Can I trade it to get short? Yeah, of course you can. This is actually this one here. Well, you have one over here. This is a divergence, or it's a new or equal high with negative delta. I don't have the, in case you want to set up your chart, you can just, NinjaTrader, they have this one, current day, open high low. If you would put it on, right? I know this is the high of the day up here. I know that I have a divergence. I'd be looking for this market to sell off, right? I've got my divergence and ratio. To me, that's almost an automatic trade. Came back up. This is the O2X. Came back up within a tick of that high and then sold off. But ratio and divergence is sort of an automatic trade for me. Again, I've got a lot of different trade setups, so I'm trying to focus on just a handful over these next couple of days that you can take away and use in your own trading. So anyway, guys, it's coming up on 10 o'clock. I don't want to keep you guys on much longer, but I just want to get through some more of these questions. What are the dark green rectangles at the bottom of green bars? Dark green rectangles. Well, these match up to those indicators. Again, really quick, if you're using the software and you don't want to have triangles, that's what these are down here, right? That's what these little triangles are. So for example, if, I don't want to have any triangle up or triangle down. So for example, the zero prints, right? What you do is you just change it from triangle up to price box, triangle down, price box. So you're going to see that dark green one, disappeared there. It was right here earlier. But that's one way you can get rid of them. I'll ask any technique to identify whether he is aggressive seller, aggressive buyer, aggressive seller, passive buyer on bid side. Well, on the bid side, anytime a bid trades, you're going to, one, have a passive buyer, and two, you're going to have an aggressive seller, okay? Because the passive buyer is going to be sitting there on the bid, and you need an aggressive seller to sell into it. That's how a trade happens on the bid side. So what you're looking for, so like everything on here, on everything on the bid side, there was a passive buyer that an aggressive seller sold into. But what you're going to be looking for is the outsized volumes on the bid side, right? Imbalances on the bid side, just as you look for that on the offer side, outsized volumes on the offer, or outsized imbalances in the two-way auction on the offer side. Are you considering bar volume as a measure of conviction for your basic setups? Well, I wouldn't say I look at bar volume for conviction. I look for normal volume. I'm always a little leery of abnormally light volume in taking a trade, but I do like to see just regular volume. There are certain times where I like to see heavy volume and a certain type of bar activity. I like talking about pin bars earlier. I like to see heavy volume. I like to see pin bars on bars that have extremely heavy volume. Those are nice reversal bars, as opposed to just a regular, pin bar, tweezer bar, whatever you want to call it, Pinocchio bar, hammer, shooting star. I like to see abnormally large volume there on those bars. For example, would a VPOC with very small relative volume be less significant? Well, the thing is with the VPOC, every bar is going to have a point of control, whether it's light volume or heavy volume. So for example, okay, let's take a look at a market that, should I look at? I'll look at meal, okay. Oh, okay, soy meal, okay. I'm just using this as an example because you do get bars that, you know, it alternates. So for example, like this, right here you've got a BPOC here, even here, okay, this bar, right? It's 146, and here's 174, but the previous bars, you're looking at 290, 481, 225, so it's lesser, just as, you know, you're getting in here. This one's not a VPOC, that's not a VPOC. Again, I'm just using this as an example. You know, there's nothing overly light. You know, here, right, here's your, is that your VPOC? Yeah. 69, you know, if I was looking at, say, 32, abnormally light, but maybe if I get to a minute-based chart, I don't want it to be like super light, I guess, is the saying, but you know, oftentimes when you have light volume on a bar, you have a very small bar to begin with, right? Like, you know, 1 or 2 ticks, like this bar is 2 ticks, this bar is 3 ticks, 42 contracts. You know, when you're dealing with bars with very light volume, you tend to get, you know, much smaller bars. Let's just really quick go back to Friday here. Maybe there's a better example. Okay. Where was Friday? Let's get in here real quick. No, I have to load more data. But, you know, I said if it was abnormally light, but the problem is when you're going to get abnormally light volume, is you're generally going to have a very small bar to begin with. And smaller bars often get overlapped, and you're not going to end up with a VPOC. John asks, is heavy volume at the bottom of or top of a bar akin to volume spread analysis? Kind of. I know the guys in volume spread analysis also use that term, stopping volume. So it's kind of similar, although, you know, sort of the way that they look at volume is a little bit different than order flow, because they're not necessarily looking at the order flow. I mean the rectangles that have 2 price levels. What is it? Maxim, send me a screenshot. So, okay, unfinished business. You sort of answered your own question there. David, can you look at trading FDAX this week? Yeah, well, I mean, you know, the DAX, start to, well, what are we here? Again, you know, whether you're trading equities, you know, DAX, MES, you're still looking at similar, the same things, okay? So, I mean, DAX is, yeah, I used to trade a lot of DAX when I worked at Commerzbank. But again, I'd still be looking at the same things. It's one of those contracts where, you know, I used to consider it like the NASDAQ. Now I think it's more similar to YM in terms of movement. But the thing is with DAX, though, it does trade lesser volumes. You know, talking about, you know, lesser volumes. So, for example, you know, this bar's got 11 contracts. This bar's got 10. The previous bar's got 100. Right? So, you know, on the bars where you're seeing the smaller volume, you tend to have smaller bar size if you're looking at a minute-based chart, at least. So you're not going to often end up with a lot of VPOCs there. There are about 10 indicators below delta candles in the indicator list. Yeah, I'm not getting into the individual indicators here. No, on the order flow trader software, there is some of these things like that were indicators before. These are like our standalone indicators. Some of them are actually built in here already, like tails and sequencing and stuff like that. But in here, you got a bunch of buying and selling tails, delta divergence, exhaustion prints, imbalance reversal, inverse volume imbalance, sweeps, market weakness, et cetera, et cetera, et cetera. There's about, I forgot how many, at least 15. Anyway, guys, I'll keep it there. I'll end it there. I'll take a look and see at a couple of these last questions. And maybe come back. We're going to meet again this afternoon at 2 o'clock. And again, I'm going to sort of, recap what I talked about during the day, sort of the trade setups again, that I was looking at. Yeah, 2 p.m. Central Time, not Eastern Time. So let's make sure that. And again, by this evening, the replays should be up in that members area. I'll just put the link up there really quick for you in the chat. But I'm going to send out an email about the replays. Right now, there's nothing on the replay page because obviously the where is it here? Where's my chat area here? Obviously, we just finished the first session, but it'll be on this page, orderflows.com/masterclass/replay.html. It'll be on here, so you'll be able to see the first one here, and then the afternoon replay up here tonight. So anyway, guys, I'll see you guys later this afternoon. So have a great rest of your day, and I'll catch you guys later. Bye-bye.